Good morning, everybody. It is Thursday, May 19th, 5:51 a.m. Central Time as I speak here. July corn futures down 6 3/4 at 774 3/4. December corn down 12 cents at 728 1/4. July soybeans up 1 3/4 at 1664 and a half. November beans down 9.5 at 1490. July Chicago wheat down 19.5 at 12.10 1/4 last trade. July Kansas City wheat down 28.5 cents at 12.96. July spring wheat is down 12 3/4 at 13.40 and a half. If you guys are listening on the podcast, appreciate it as always. Leave me a review on that Apple app in particular. If you're watching on YouTube, guys, subscribe to the channel, like these videos, leave me a comment. Let me know what's going on in your neighborhood. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Check out my premium subscription service. I send my premium subscribers a ton of information every single business day. Morning email, text messages, grain marketing recommendations, weather information, charts, graphics. My daily subscriber-only videos are part of this package. I did a video yesterday where I ran through a whole bunch of economic indicators, talked about the possibility of recession here in the United States and what that might mean for our grain markets and for some other markets. Had a lot of interesting charts. Some of them were conflicting. Some really interesting stuff that we've never seen before. You know, this whole deal with COVID that began in spring of 2020 really kind of turned the world upside down, and I discussed a lot of that. So if you guys are interested in this premium content, $50 a month, guys, sign up today. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. The U.S. stock market is under pressure and is at risk of posting some fresh lows for the year here today. The S&P 500 lost more than 4% yesterday, which is a huge down day. The Dow Jones lost more than 1,100 points, 3.6%. The NASDAQ lost 4.7% yesterday. These markets are lower again this morning and sharply lower. So the S&P is nearing bear market territory. That technically occurs when a drawdown of 20% or more from the peak is achieved. At yesterday's close, I believe the S&P was 18.6% removed from its all-time high, which was posted in early January. Fears are building, especially on the retail side, amid poor quarterly earnings. We saw results from Target and Walmart this week, and they were not good. Inflation apparently is hitting the consumer very hard and appears to be affecting spending. Gas prices, diesel prices both hit record highs again yesterday, according to AAA data. Again, futures in the stock market trade sharply lower this morning. So yesterday was what we'd call a risk-off day. Traders just selling assets pretty much across the board, stocks, commodities. You had a few things that were higher yesterday, bonds, some of the currency pairs. The hog market was independently higher, but kind of an ugly day. And I think that this action in the outside markets may have something to do with the pressure that we've seen in the grain markets the last couple of days. There are certainly fundamental factors too. I mean, we've got a pretty open planting window for corn and soybeans here in this country, for a lot of places at least, and I know it's not perfect. That has something to do with it. You know, you've got some other fundamental type issues going on, but don't underestimate this money flow issue. If things get bad enough in the stock market, in the economy, these large money managers or large speculators who are very heavily long the grain markets, they may head for the exits. And maybe you're seeing just a little bit of that here. Maybe not. Maybe it's all supply and demand, and the stock market thing has nothing to do with it. My opinion is that this sell-off in the stocks, this deteriorating economic type environment that we find ourselves in, I think it does have something to do at least partially with the selling pressure that we've seen in the grain markets. This is an update on a story that I discussed yesterday. The United Nations is in intense contact with Russia, Ukraine, Turkey, the U.S., and the European Union in regard to Ukraine's export program. Ukraine's ports in the Black Sea are shuttered. There's no grain moving out of there. UN Secretary General Antonio Guterres said late yesterday, "I am hopeful, but there is still a way to go. The complex security, economic, and financial implications require goodwill on all sides." He is attempting to restore Ukrainian grain exports in an effort to avoid food shortages and that sort of thing. He addressed a UN food security meeting at the United Nations that was hosted by U.S. Secretary of State Anthony Blinken, I believe yesterday. So this UN chief is trying to convince Russia to allow Ukraine to export grain out of its ports. In exchange, Russian food and fertilizer would have, quote, full and unrestricted access to world markets, end quote. Russia's UN ambassador said this: "The discussions, as far as I know, went well and positive. We are prepared to do our share. The Ukrainian grain market access, that's another thing. So Russia doesn't seem overly interested here. This is the thing. There's no direct sanctions on Russian fertilizer or grain. So what is the UN actually offering here? I don't really know if they're offering much of anything. I think they're just trying to convince Russia that it's the right thing to do to allow Ukrainian grain exports. In all likelihood, for this to occur, the West would probably need to lift some of these economic sanctions, which I think seems very far-fetched at this point, in order to strike any sort of deal. So this is unlikely, I would say. I would say at this point it's unlikely that Russia just steps out and says, yeah, go ahead and resume grain exports out of these Ukrainian ports. That seems very unlikely to me. If that were to happen, it would be a tremendously bearish factor in regard to these grain markets, I think. I think it would very simply just cause these large speculators, a lot of whom are in the market, long the market because of this Ukraine-Russia situation, they'd want out, and it would be no more complicated than that. The Wheat Quality Council completed day 2 of its HRW wheat tour yesterday. Scouts toured 254 fields in western, central, and southern Kansas, in addition to some northern counties of Oklahoma. The day 2 yield estimate, 37 bushels per acre, down sharply from last year's 56.7, the 5-year average of 47.1. No surprises here. Everybody knows that the crop in the southern plains is in tough shape, ongoing drought, heat stress, all sorts of things along those lines. The tour will run 6 routes today between Wichita and Manhattan. They will release a final production estimate this afternoon. I will discuss that tomorrow morning. U.S. ethanol production flat on the week, 991,000 barrels per day. This is, if you were to compare this to 2018 or 2019, like your pre-COVID levels, this is below average. Ethanol stocks declined marginally, but remain at their second highest level seasonally on record, behind only 2020. So ethanol stocks are still pretty high. Implied gasoline demand was up 3.7% on the week, but it's running a few percentage points behind last year's levels. And that's something that could be a concern for the corn market, of course, in particular, which is tied very closely to gasoline usage given the ethanol implications. So this is something to watch. USDA will release its weekly export sales this morning. Export sales report this morning at 7:30 a.m. Central. Corn sales for old crop expected 150 to 450, new crop 500 to 900. Soybean sales rather for old crop 150 to 500, new crop sales 50 to 600 expected. Wheat sales, maybe some net cancellations for old crop up to 150 positive, 50,000 to 250 for new crop in wheat sales expected. The cattle market was lower yesterday. Feeder cattle lower. There was some cash reported at 138 in the south, 140 to 142 in the north. The box is marginally lower. The hog market exhibited some independent strength yesterday in a rebound effort there. The outside markets, U.S. dollar lower this morning. The S&P is down 40 points. The Dow down 300. Bonds are up. Precious metals up. Crude oil is off about $1.50 here this morning. Everybody have a great day today. I'll talk to you guys same time tomorrow.